Okay, good morning, everybody, and welcome to today's webinar. I am Addison Snell with Intersect360 Research, joined by my colleague, Dan Olds, our Chief Research
Hello.
Officer. Hey, Dan, how you doing?
I'm good. I'm fired up, Addison. This is going to be a big webinar. I've been choking down coffee, Red Bull, and Monster Energy drink all morning just to get psyched for this. This is the first time that we are introducing our grand unification theory. No, it's not a theory, it's a fact, where we're going to look at the entire data center market and then carve it up into the appropriate chunks. So I am fired up for this.
Yeah, we normally do a pre-ISC or pre-SC webinar, and this is the time of year we talk total market size. And our astute observers will notice right on the title slide that we're calling it our worldwide HPC and AI training market. We've always talked about the worldwide HPC market. Now, that's included a lot of AI training, of course. Our surveys have shown that most HPC users have integrated machine learning at some point. It often increases the budget. There's often an ancillary budget. The Summit Sierra supercomputers, they do a ton of AI. So that's not new. So why HPC and AI training? Well, we've been sizing AI training independent from HPC, and that's also not new. We've been doing that for a couple of years, but it always divided pretty much between things that were associated with HPC budgets or things that were done in the cloud. So they were associated with hyperscale budgets. This is the first year that we measured enough discrete AI training on-prem, not affiliated with an HPC budget, that it really warranted pulling that out separately.
Yes, and let's talk a little bit about how we're going to run this webinar. We're going to get through all of the slides. There's quite a few of them. It'll take about the first 60 minutes. We are going to have half an hour for question and answer afterwards. I'm going to be monitoring that. Put your questions or comments into chat. And Addison is all ready to go. He hasn't spoken for the last 12 hours, so his voice will make it for the next 60 minutes, which
Feeling
I thought
fresh.
was good. You're feeling fresh.
Here we go. All right. So first of all, we do have a lot of upcoming market reports that will cover the HPC and AI markets. These cover our normal segmentations. However, we are presenting two views: a traditional HPC market view that conforms to previous years methodologies, as well as an expanded HPC and AI training view that brings in those additional budgets. And you'll see more about that shortly. The first of these reports, the product and services segmentation, which you'll see us present on, that report is already posted online and has gone out to our clients. The data for all of the others is also complete, and our clients have received a complete workbook with all of the detailed data behind the charts that you're going to see today, and the written reports will be forthcoming. Let's start, though, Dan, with this grand unification model of data center, so people can really get entrenched in what we're talking about here. This is to bring together all of the interrelationships between HPC, AI, cloud, hyperscale, enterprise at the data center level to show how they relate to one another. The reason why we're doing this now, we have historically tracked both HPC and hyperscale markets. Our clients have been mostly focused on the HPC markets, but Dan, going back to 2007, when we were talking about traditional HPC and edge HPC, we had a market methodology in 2008 that defined what we then called the ultra-scale internet market. We started sizing it. We broke it out separately into what was then called hyperscale starting in 2014, and have market sizes for hyperscale going back to then. It's been really important as AI has taken hold, because so much of AI is done by these hyperscale companies that it's a dominant part of the market
for their own purposes.
For their own purposes.
And that is a surprisingly large amount of the market. And, we spent the last 2 months pulling all of these numbers together, really looking at it from various angles, from the demand side, from the supply side. We fought over these numbers. We tussled quite a bit. There's even a little knife play at one point, but we came out okay. And we've checked these numbers from every angle we can, and we're very confident in them.
And we last sized the hyperscale market in our research in reports that we published in 2018. So this will be 3 years hence. At that point, it had been growing in the high 20s year over year since 2016. It has continued at that rate, and the market sizing here was work that we did independently to what we did in 2018, but it really wound up being quite consistent. So let's take a look at how this breaks down. This is the data center market. This is the first time Intersect360 Research has published a total data center number, but it was important for the work that we're doing here in terms of the unification. All data center infrastructure spending worldwide in 2021 is $235.1 billion. This is done such that if you look at that little grid there, every little cell is 1/10 of a billion or $100 million. So there are 2,351 little cells in that picture, which is why it has irregular corners. It's to get the right number of cells in the picture. So every square is $100 million. Everyone with me? That's the spending.
It ain't artistic, but it does get the point across.
Right. So here's how this starts breaking down for 2021. The hyperscale market has now grown to where that is $115 billion out of that $235.1 billion worth of spending. It is essentially half of all data center spending. It rounds to half. It's just a tick under half of the overall spending. And that's by spending, not by node count. By nodes, these are often cheaper nodes, not when they're doing something like AI. Those are robust nodes, but a lot of the hyperscale infrastructure is cheaper nodes. So by node count, it actually goes up from there, but it's half of all spending. The other half on the left is going to be your on-prem that's not hyperscale. The proportion of that's HPC AI is growing because more of the on-prem enterprise starts going toward hyperscale. Now, Intersect360, we're generally not too focused on the on-prem enterprise, non-high performance part of the market, but everything else on here is something that we are concerned with. On-prem HPC and AI, this is just the data center spending. So we've taken some categories of things like, cloud spending's not in that, services not in that. We're looking at the infrastructure. That's $30.8 billion. The reason it's two different colors there is the blue color, 29.6 billion, conforms to our previous HPC methodology, which is to say it's HPC types of budgets, which are often mixed HPC or and AI environments that include machine learning. The really dark blue portion there that's 12 squares worth is the pure AI non-HPC on-prem component now we've sized at $1.2 billion. This is the first time we found enough there to really break that out. That's going to be AI that in no way is associated with an HPC budget or spending that wouldn't have happened otherwise. If you take something like the Summit supercomputer and you say, well, that's AI and that's a big part. Okay, yeah, but that's a supercomputer we would have had anyway.
Very HPC related.
Yeah, it's HPC related. It's part of the HPC market. I'm talking about, someone who's not doing any HPC at all. It's not related to any HPC budget. It is AI from whole cloth, not tied to HPC, that's discrete. That's that $1.2 billion. Let's start breaking this down a little more. The hyperscale portion, this has continued to grow at a 26.1 compound annual growth rate since 2018. So that's the last 3 years. And that's consistent with our previous forecasts.
And
this is, go
let
ahead,
me jump in from one
Uh-huh.
question asking, is this just hardware spending or does it include software, et cetera?
It includes some software. It includes the software that's really part of systems spending. It's not going to include all application spending. It's not going to include all software, but includes, I would say, most software.
No
that goes in
staffing,
this.
no
Right.
facilities. That's been
No
backed out.
staffing, no facilities.
I
Right.
just wanted to make that clear as we start to go through this. Okay, back to your rant.
Yeah, and we'll get most of the questions at the end, but that was an
Yes.
important one to get in now. Thanks, Dan. This is highly concentrated into the high end of this. There are 10 hyperscale companies that account for over 80% of that $115 billion. Those 10 spend over $1 billion each per year. 4 of them spent over 10 billion last year. 2 of them spent over 20 billion last year. We've done independent analysis of 12 different companies. 10 of them cleared that $1 billion hurdle and account for more than 80% of this spending. Now, when we say hyperscale, there are 2 points I'd like to make about this. First of all, hyperscale is more than cloud. People will sometimes conflate the terms hyperscale and cloud service provider. Many or some hyperscale companies are cloud service providers, but even then, cloud service providing business is only part of what they do. For example, Amazon is bigger than AWS. Microsoft is bigger than Azure. Google is way bigger than GCP, right? The amount of infrastructure they have to support all of their businesses is a superset of the infrastructure that supports their cloud business. Furthermore, you get companies like Apple and Facebook, and they're or not. Well, Apple is a cloud provider, but they're a consumer cloud provider with iCloud, right? So that's a different sort of cloud service provider. Facebook isn't really a cloud service provider. These are the types of companies that have hyperscale infrastructures that we are tracking, that we sized as part of this methodology. It's interesting that hyperscale has created, Dan, data center markets out of consumer markets that didn't used to be enterprise computing. When you're storing your music and your email and your photos in the cloud, or there are now consumer cloud markets that become data center on the hyperscale side.
That came out of whole cloth, or they've taken market share away from hard drives.
Right. So there's a lot of consumer stuff that's now gone into hyper. Look at content streaming or massive multiplayer online games. There's a lot that goes on that's on the consumer side that becomes part of the hyperscale market, but it is a data center market. And it's important when we start looking at it in the context of AI because it affects all of these things.
Absolutely.
Now, when we look at the HPC, that shouldn't say HPC in the cloud there. That should say HPC total.
On-prem.
That's just HPC on-prem. That got copied badly from a different slide.
So make that correction.
You want to
fix it on the fly
right now.
Oh, you don't see this often. Most analysts couldn't handle making this fix in the middle of a webinar.
That infra stands for infrastructure. I should have caught that before. HPC, AI, and infrastructure on-prem is $30.8 billion. That breaks down into the 29.6 that I spoke about before. That's the traditional HPC budgets, and the 1.2 billion that's the pure AI. That's a little over a quarter of all on-prem data center spending, which is higher than it has been historically. And that's because so much enterprise business is now breaking off into cloud computing. So the 29.6 is associated with HPC budgets conforming to our previous year's methodologies. This is the first year that on-prem AI tracking warrants tracking separately as the 1.2 billion. And we're showing both with and without that 1.2 billion in our views to our clients, because if without the 1.2, you can do year-on-year comparisons. With the 1.2, it's more of a whole market view. So we want to look at both of those things. Then here's where HPC in the cloud comes in, and where that should have been. Here's where uh, it starts extending into the cloud. If we add in what's done in the cloud, with HPC budgets, that's now $4.7 billion out of HPC spending that extends into the cloud. AI training in the cloud is really cloud heavy. There's 1.2 billion on-prem. There's an additional 4.1 billion in the cloud. The pure AI budgets not associated with HPC are 75% cloud and 25% on-prem. So total HPC and AI in the cloud is $8.8 billion there, Dan.
Yep. A big number.
A big number. And the reason the pure AI is more associated with cloud than the HPC is it has to do with skills and infrastructure. If I'm starting to do an AI project, if I have on-prem HPC skills and resources, I can start doing it on an HPC system. I add GPUs to it, maybe, I increase the budget, maybe, but I have skills and resources internally, and then I can burst out to cloud as necessary or go for special configurations, things that we always talk about with regard to cloud in general.
Or on the other hand, your small little projects, you can start them in the cloud, and as they grow, bring them back inside to your HPC infrastructure. You can a lot of pilots out there.
Right. And then with regard to the non-HPC related stuff, well, if I don't have the on-prem skills or people, it's more natural for that to start in the cloud. And the reason, it's not like AI training is just brand new at the enterprise level, but it was almost all cloud until this year. What we're seeing now is some of that repatriating, where some people who've started in the cloud and are scaling up are moving it on-prem. One thing to say about this is you can't then assume that that $8.8 billion that's highlighted is taking up really that proportion of all of the hyperscale infrastructure it's overlapping, because I'm cheating a little bit, right? What they charge the HPC and AI people coming in to use the cloud is not the same as what they pay for the infrastructure, right? And that should be pretty clear here. But now look what happens when we add in how much AI training is done by the hyperscale companies themselves. This is part of their infrastructure. $12.8 billion, which is, that's in the range of about 10% of their overall infrastructure, a little more than 10%. They're doing AI training on that. Think about that $12.8 billion in the context of supercomputing. How big a supercomputer would $12.8 billion buy you? That's a couple of major supercomputers worth of AI training going on by the hyperscale providers in the cloud. It is more than the total amount of AI spending that's pure AI that's not in the cloud. It is more than the total amount of HPC and AI spending that is in the cloud. It is a dominant user of HPC and AI technologies by the hyperscale companies. It is not included in most of our charts because it would distort the market. If you start including hyperscale as a vertical market for HPC again, it's your number one.
It swamps everything else.
It swamps everything else, and it's a hard one to address for most of our clients. If we say, well, the number one is go sell to these hyperscale companies, why don't you go do that? For 15 years, we've been calling it the Chuck Norris segment. You don't go and find it. It comes and finds you.
Yeah.
It is very difficult to go sell to them intentionally. But when you're a major component provider, like say an NVIDIA or an Intel or an AMD selling the processing elements for AI, your number one client is going to be these hyperscale companies.
Absolutely. And that's why we decided to bring all of this into our tracking.
Exactly. So this is just to put it all in context before we get into our traditional market sizing. So just a final point on hyperscale. To give it some perspective, a large-scale national supercomputer costs hundreds of millions of dollars. If you spend 300-400 million on a supercomputer, you've got a pretty good supercomputer. Fugaku was what, $400 to $500 million, right? That's the current ranking number one before we head into ISC. In context, at least 10 hyperscale companies are spending over $1 billion every year. So that's multiple supercomputers worth of infrastructure going into 10 companies every year.
2.5
Four,
Fugakus.
yeah, four of them spend an order of magnitude more than that. So, if you spent $100 million, that's a good computer. Four companies spent 100 times that in 2021. Two companies spent 200 times that in 2021 with over $20 billion in data center infrastructure, a large portion of which is going to AI. What pays for that? Well, that's the value of your personal data, Dan. That's
Yes,
how
it
much
is.
they're willing to do for your personal data. Hyperscale companies alone spent over $12 billion on AI last year. If we took the top two, those two companies that spent over $20 billion last year, if we took their worldwide data centers, Dan, they wouldn't fit in Manhattan. You couldn't fit their data centers in Manhattan. It's more than
Even if you
25
used
square miles of data centers.
even if you use the ferry docks, that's where you would put your Coke machines and break rooms.
You'd fill up Central Park. You
Yep.
could put just one of them, was clocking in at about 14 square miles. It fits into Manhattan. That's fine. You wouldn't even have to have any computers in Central Park. But by the time you take the top two, it's more than will go onto Manhattan Island. That's how much computing we're talking about for hyperscale. That is the context we're talking about. And it's important because, and I'm going to get off of this rant, but it's important because it's so big that it's unstable, Dan.
Yeah.
That sizing hyperscale is now both a microeconomic and a macroeconomic exercise. We have written a few years ago, and it is still true, that it is rare in human history that so much power and influence has been concentrated into so few companies. I don't think it has happened at this scale since the late industrial revolution. And it generally is not long-term stable to have that. So I don't think it'll last another 15 years like this, but we're not changing the forecast in the next 5 because of it. It's just it's weird to have it so top heavy like that.
Yes, and there's microeconomic factors as well. Nothing grows to the sky. And
This is so far.
so far, yeah, but
So
forever,
far.
no.
Okay, now let's get to our normal forecasting, but you're going to see us using HPC and AI market forecasting. And in a lot of cases, we'll look at traditional HPC budgets, and in some cases, we'll pull in this non-HPC associated additional, what we call pure AI spending that's not associated with the HPC market. That's these two views. The traditional view, HPC budgets. It usually includes machine learning. It's not that all machine learning is only in the other one. This usually has machine learning in what we would call the traditional HPC views, and in many cases, increased budgets because of machine learning. But it conforms to the methodology that we would have used in 2020 and before. The expanded HPC and AI training view includes HPC budgets that are in no way connected to HPC. It's important because this is how most of our clients on the technology supplier side look at the market. If they're selling an AI box to somebody, they don't really care if it's a traditional HPC budget or not. And in fact, this is the basis of our market shares going forward. When we count on-prem systems for HPC and AI, that's going to be that expanded view. But it excludes that hyperscale portion of spending on AI unless otherwise indicated, because the hyperscale spending is just too much. It would dwarf the market. If we've got a client out there who wants us to include it in the TAM, we'll model it back in. But most of the time, we're not talking about that. Here are some notes on 2021. We returned to single-digit growth after a down year in 2020. 2020, pandemic year, was flat to even down, was a disappointment. We had the pandemic. We were forecasting a huge rebound in 2021 because the pandemic was going to be over, Dan. We weren't going to have the pandemic anymore,
Hooray.
Dan.
No.
And we were going to be up 16% year over year. Didn't happen.
Did not happen.
This was well below our previous forecast expectations of a bounce back because we still had the pandemic out there. Not only did we have lingering pandemic economic effects in many vertical markets, but 20% of HPC users in our survey said supply chain disruptions affected their ability to spend their full 2021 budget. We were having supply chain issues toward the end of the year. We put out an alert prior to Supercomputing 2021 to say that we were off the forecast and that we were going to be in single-digit growth, and that's where we came in. Cloud, however, has continued not just growth, but breakneck growth. It is the seventh straight year of double-digit growth, the second straight year over 75%. And we are now seeing, as we said, enough on-prem non-HPC AI to track it separately, but most of that is still cloud. And we're going to be talking a lot about cloud and how much of that is there. When we look at the forecast, the big thing is that, we did so much work, Dan, on that oscillation in the market. Here's the bounce back, then the echo effect, and it wiggles out. And then the pandemic lasted too long. That's a model for a short-term recession with a long sales cycle item like HPC. By the time you have 2 years of recession, you don't do that. You hit a new normal and then a growth curve. So what we really did is we wiped out 2 years of growth. And now we're going to go back onto a steady growth path, which is good that we get back to a steady growth path, but really we get back to a year and a half below the growth that we would have had without the pandemic. We will get back to 7% CAGR for the traditional HPC market. That takes us to 59.2 in 2026. If you add in the pure AI budgets, the combined HPC AI training market is a slightly higher CAGR, 8.6%, and that'll get to $70 billion, not including that hyperscale market spending by 2026. Cloud will continue its double-digit fast growth in the near term, but it flattens out. It will not, as you said just now, Dan, nothing grows to the sky. It peaks at about 18% of HPC spending and keeps growing past that to about 25%, including the AI training model, but will level out to more market growth levels. And in fact, within pure HPC, starts repatriating some back from the cloud toward the end of this forecast period.
That'll serve to damp it down.
Exactly. So here's what some of that looks like. This is our product and services segmentation. This is the one for which our full report is already published and available on our website now to clients. It's the first segmentation people tend to look to us for. So this is 2020 versus 2021. This is the traditional HPC view without those pure AI budgets, 5.2% market growth year over year. The servers themselves were up 3.4. That does not, HPC servers at that new level up 3.4% are still below where they were in 2019. So they lost about 7% 2019 to 2020, recovered 3.4 into 2021, but that's still a server number for a traditional HPC below what it was in 2019. So that's those low single digits that we were talking about. Cloud, and some of that is because of the supply chain, Dan. There was demand for a little more than that, but supply chain kept it down.
Yes.
Cloud growth, on the other hand, was up more this year than it was the previous year. We had it up 78% in 2020, then up 85.2% in 2021. And that's because cloud does so well with uncertainty. You have the pandemic affected the economy, you've got supply chain disruptions. Cloud does well with that. If I can't get something on-prem, or even on the other side, in areas that are accelerating projects, like in pharmaceuticals, cloud handles that really well. It's so elastic. This is not a normal growth rate for cloud, but for the last 2 years, going over 75% year-on-year growth. Networking was down year over year, but that was after it was up significantly in 2020. That's more regression to the mean, and the other segments were all flattish, either slightly up or down, depending on the segment. When we look at this expanded HPC and AI training, you can really get a sense of the magnitude of what's the pure machine learning budget that's not associated with HPC and how much we're adding in. You can see it there that it adds $5.4 billion to the market on top of the 41. That takes us to the mid 40s on the market. Cloud is a huge portion of that. 75% of that spending is cloud computing, which takes cloud to 8.8 combined, not including the $12.8 billion that we already talked about that's hyperscale AI training. If you're the sort of person who likes that sort of thing, then great. Go ahead and add $12.8 billion to this chart and have it be all AI, all hyperscale, and then that would be part of the market as well. And we have clients who would like that, right? Particularly the chip providers, the processing element providers to those hyperscale markets. That could be part of the total available market there, but it distorts the market enough that we're not including it here. When we look at the forecast, this is now back to the traditional HPC view without that discrete AI. You can really see the limited recovery. We get some bounce back this year, 2022. Hopefully, we'll start seeing some market recovery, particularly in energy. We'd like to see that start coming back, where the price of oil is now up, but it didn't translate into spending in 2021. We're waiting for manufacturing to come back. We look at this bi-vertical market with regard to the pandemic effect. Still some big growth in cloud, not 75% level, but solid growth 2022, 2023. And then you could see it start to hit that asymptotic growth where it's really just a stable part of the market after 2024. So that translates to a 16.7% 5-year compound annual growth rate for cloud, but that hits its peak of penetration in 2024. The big growth is all in the first 3 years of that market forecast. The HPC servers, we're looking for a 6.6% compound annual growth rate. That's nice and healthy, but it's coming after 2 years of really no growth. So that's to say there's no pandemic recovery to HPC servers. They lost that growth. A lot of it went to cloud.
Yeah.
This now includes that pure AI training. I'm not going to do this for every segmentation because it starts getting redundant, but here you really see the increase in cloud because cloud has such a much higher penetration into the pure AI portion. It does have a slightly higher CAGR at 8.6% overall. And here by the end of the forecast period, you'll notice that there is very nearly as much cloud, 17.8 billion in cloud, as there is in on-prem servers at 18.7 billion by the end of the forecast period. Combining those pure AI budgets, it's really nearly as much cloud spending as it is server spending by the end of the forecast. And again, just remember that's not including the spending by the hyperscale companies, which is not part of this forecast. The vendor revenue shares break out like this for 2021. Now, this is HPC plus AI training, and that's mostly because to the server vendors, it doesn't matter. So we're looking at HPC, including the on-prem AI training portions of this. HPE had double-digit growth this year. Cray was strong this year. With installations such as Perlmutter, even without the Frontier system coming in. And we expect we'll continue to see more good stuff from HPE as some of those exascale systems start to hit. HPE overall is still slightly ahead of Dell. We have much higher shares reported here for Lenovo and Supermicro than in previous years, and that's due to a change in methodology that we applied to both 2020 and 2021 to more consistently account for channel sales among these OEMs. We did an audit of that, Dan, and found that we weren't really being rigorously consistent with how channel sales were accounted for all of the vendors. We always had a rule before that we were trying to give all of the sales to the end provider if that was a channel partner or somebody, and it just wound up being too hard to do that all the time because the channel sales are mixed into
Yes.
the supply side number. So now we're moving more of that over to who designed the system, regardless of the channel it's provided through. That gives a lot more share than we used to be reporting to Lenovo and Supermicro, but it's consistent for all of the vendors, and it's just a change in methodology there.
Much more fair, much more consistent, makes a lot more sense to me.
China was strong, and companies that have a strong presence in China, like Supermicro, like Inspur, like Huawei, did pretty well this year. China just had a very strong year. Fujitsu was down year over year, and that's not really negative to Fujitsu. It's just they didn't have a Fugaku in 2021.
Yeah.
They had a Fugaku in 2020 that was close to $500 million. They did not have a Fugaku in 2021, so you see a year over year decline. And I guess that's what we have to say about that. There's still an other category for some other major vendors that we don't track. And then this is what the year over year looks like different. Remember, we applied that change in methodology equally retroactively back to 2020 so that it's apples on apples here. And the growth rates that you see year over year are consistent with that change in methodology. You can see the real decline in Fujitsu as Fugaku goes away, whereas the biggest grower year over year was Supermicro. Supermicro just had a really big year. Vertical segmentation. This is another year where most things were really flat due to the pandemic. Now, government sector had big growth in 2020. Did not have big growth in 2021. The government sector overall was up 3.3%. I think we were expecting to see it bigger than that, but we were also expecting a frontier in there. And we did not get a frontier in there. We didn't get a lot of the pre-exascale stuff in Europe yet. Supply chain was a factor here. So academic, only slight growth, and from a 2020 that was flat. Government, only slight growth, and from a 2020 that was up. Commercial overall was the best grower here, but that's after a 2020 that was down. Biosciences was up in 2020 and was up again in 2021, and that's because of pharma, and that's the vertical that's going to do well in a pandemic, Dan. They had to keep spending. They were getting a lot of help. The interesting top grower year over year, and I should have done a hide and a reveal on this and get people to guess, and I would have put the question this way: what industry got hammered in 2020 in the pandemic, but then pivoted its business model in 2021 to something that was pandemic friendly? And it was entertainment, right? And all of the features that people stopped going to the movies in the pandemic, but then they found a pivot to online and streaming, and a lot of things that were really effect heavy. A lot of the digital streaming and stuff is really properly part of hyperscale. When you look at your revenues of Amazon Prime Video and Netflix and things like that, that's a hyperscale market. But the HPC systems that get used for a lot of the high-end effects, which are your superhero movies and the like, those are HPC systems, and we saw strong growth in media and entertainment in 2021. Anything I'm leaving out, Dan, that you wanted to say?
No, I think that's good.
All right.
Good summary.
We're doing well. Here's a chart where we're going to put hyperscale in. So let's say we look at the total HPC and IA training market and make hyperscale a vertical market. There it is in your lower, I almost said lower right. It goes from everywhere from 4 o'clock to
southeast.
To 6:30 down there is hyperscale at 22% of the market. That's just the AI servers that are being bought by the hyperscale companies in 2021 are your number one vertical market. It is more than the entire government sector combined. If you add up the entire government sector and what they spend on HPC and supercomputing, that does not add up to what hyperscale spent on AI last year.
Really puts it in perspective.
It does. So that's why we tend to omit that from the view. This is the vertical markets forecast, traditional HPC view without the AI. It doesn't look a lot different if you put the AI in. So I'm just picking which one to show here. The government sector will lead the growth over the next 5 years. Exascale and an increase in national security spending. That includes a lot of AI, but that AI is related to HPC spending most of the time when government does it. I gave the example with Summit before. That's a supercomputer. The government would have had a supercomputer. They just also doing AI with it, so it becomes part of our traditional HPC tracking. Region segmentation. I said that China was strong. That led Asia Pacific to be the #1 grower again in 2021, and by a fair margin. So this had the effect, Dan, of pulling Asia Pacific ahead of EMEA for the top region by spending for global regions, despite the fact that it didn't have a Fugaku in 2020. That's how much business there was in China last year.
Yeah, China saw the same thing in 2020 versus 2019. China came through and continued spending through the pandemic and again in 2021.
I was just getting a little water there while you were talking. So
sure.
Asia Pacific is the big grower. That's not going to continue at that pace. Back to your "nothing grows to the sky" comment.
Yeah.
That continues to be true. Chris Willard used to refer to that as the "all the money in the world" problem. That if you have a growth segment whose spending is exponentially greater than all the money in the world grows, eventually all the money in the world goes to that thing. Here's the regional forecast. After back-to-back years with Asia Pacific leading the growth, EMEA is going to have the highest 5-year CAGR. We're going to start to see the pre-exascale and exascale EMEA systems coming online, and that will have the highest overall growth rate, despite the fact that North America is also putting in exascale. You can kind of visually see here that the growth rates are different for the regions, depending in large part to when those exascale systems hit. China already had some of theirs. Now, that wasn't revenue systems. They were built, not bought. But to the point, we're looking at EMEA and North America, looking at where those pre-exascale and exascale systems are, those go into our forecast. If we look at HPC and AI training, visually it doesn't look a lot different, but we put in both charts here, Dan, because in this view it takes a little longer for EMEA to take over from Asia Pacific. Well, China really is, and also Japan with the ACE system, they have a little more pure AI spending than other regions do proportionally. So it takes longer for EMEA to recross back over Asia Pacific in terms of overall spending. But #2 versus #3 they're really about the same magnitude. You can think of North America, or really US plus some with Canada, as being about half the market, and the rest is about evenly split between EMEA and Asia Pacific. Latin America contributes a little, but is not a huge part of the market. The server class segmentation, this now breaks down the on-premises server portion of the market into the classes from entry level up through supercomputer, which are mostly determined by price band. There are some other considerations other than price band, like sales cycle and node count, but really we're looking at price band as the primary consideration here. Supercomputers were the only growth segment in 2020, despite the fact that Cray had a good year underneath HPC. Supercomputers were largely flat year over year. We had thought that would be a big growth segment, but again, no Frontier system this year and some other things that slipped out. High end was actually the best growth area. Entry level has been constrained a little bit by how much has gone to cloud computing. So it was kind of a funny year, depending on where the spending was coming in. But remember, government sector was pretty flat. Academic sector was pretty flat. The big growth areas in pharmaceuticals and media and entertainment don't hit that high-end segment quite as much, and they were distributed through the other segments. When we look at the forecast here, the big thing to focus on in the forecast, well, first of all, the good news, HPC servers, traditional forecast view, will grow to $17.6 billion in 2026. Bad news, that's over $1 billion lower than our previous forecast. It's actually $1 billion lower than we had previously forecast for 2025. So it takes a year longer to get to $1 billion lower than it would have been. And that's the pandemic effect of the growth that we lost out of the market over a 2-year period.
Pandemic, supply chain, all rolled into one. It's got to be paid for somewhere, and this is where it's getting paid for.
That's right. And it's just come out of the fort. We would love to say, hey, great, we had all this growth. It just hasn't been there. It will come back, and supercomputers driven by exascale, that supercomputing class of those multi-million-dollar systems, they're going to have the highest growth rate. But here's the other thing to really point out. Look at entry-level systems down at the bottom. It wiggles around a little bit, but that's actually a 5-year decline, lower in 2026 than in 2021. It goes down to its nadir in 2023. That's due to cloud. Cloud is drawing away from the entry level and mid range. Now it starts to come back as cloud reaches its max penetration, and we see some of that business repatriating. We don't think it's going to completely wipe out the entry level. We think that after 2024, that stabilizes somewhat. But we're looking for the first time, Dan, at a negative growth rate for one segment of HPC servers, and that's your cloud effect.
Yep.
Good analysis, Dan.
I know. I like to get those yeps in there, but hey, I'm tracking the questions and
no, you're doing a lot there.
Sure we got them.
All right. Well, here's the last area that we're going to look at. Sorry, yes, Dan. Go ahead.
I was just going to say, fortunately, I'm riddled with ADD. So this is playing to my strengths.
Use that hyper focus of ADHD, Dan. We'll get there. This has been a lot of work going into this. You and I have spent a lot of time on Zoom staring at spreadsheets. Yeah. Anyone who's watched that series Severance with staring at fields of data looking for scary numbers, that's what you and I have been doing for months now. All right, this is a big one. We're not showing every single subcomponent here of the forecast, but we do want to look at the traditional HPC view of the cloud segments, because that's really interesting in terms of the year-over-year growth and the forecast. First of all, we were saying just traditional HPC view, cloud increases 85.2% year over year. That's after it was up 78% the previous year. Just huge growth. Second straight year with over 75% growth due to the pandemic economy and supply chain, and it's growing across all segments, particularly those high value segments of the PaaS and the SaaS, where there's more of the services built into cloud. It's not just the IaaS, raw cycles, and storage, although those are growing as well. Storage gets a big growth. That's storing stuff in the cloud's expensive, Dan, in case that hasn't been pointed out to anybody. Yeah. And but it's high value also. So I don't mean to slam cloud. This has been an important part of the economy, because it does so well with, I don't know what I'm going to be doing right now. I want to consume on a utility basis. Cloud fills that niche. It deserves the high growth rate as a response, and then there it is. When we look at the forecast, we're continuing that strong double-digit growth rate. Certainly in 2022, that's a growth rate kind of in the 40s. Into 2023, growth rate more in the 20s. Into 2024, growth rate more in the teens, and then it flattens out. So you see it sort of curve off toward an asymptotal penetration of the HPC market, where we don't think it's going to peak around 18% of HPC spending. Could we be wrong and it's actually 20% or it's actually 17%? I guess, but it's going to be in there somewhere.
Yeah.
And we're actually going to start to see some things come back on prem. So very high growth in cloud through 2023, 2024, but then it'll regress toward more steady market growth rate. 2024, we are forecasting currently will be the 10th and final year of double-digit growth rate for HPC in the cloud. 10 years straight of double-digit growth. Nothing keeps that's a lot of years of double-digit growth year on year, and it eventually gets to where it has to max out. Now, we didn't do the plus AI view of this, but that's already an additional $4.1 billion just in 2021. That our clients can see the growth in HPC cloud in AI training added to this forecast in the reports that we've already sent with the detailed data with all the segment numbers for our clients. Conclusions, Dan. COVID-19 cost us. The pandemic cost the market. We lost growth. We had been forecasting a rebound that would recapture most of it. Last year, this time, we were saying, yeah, but most of this is deferred, not canceled. Remember, we were showing that wiggle in the market, and then so much comes back in the rebound. That was forecasting a short-term effect of a pandemic that was going to end in 2021. We did so much work on that model, Dan, and
just that model.
Nope, that's not what happened. This is more of a long-term thing. Yeah, COVID, you suck. And I also don't want to just be a market thing. This is a tragedy. We've lost millions of lives to this pandemic, 1 million lives in the United States alone now, and it continues to be a global effect. So we're HPC analysts and AI analysts and hyperscale analysts. We look at the effect on the market there, but this is a tragedy, and it's cost us in multiple ways. And probably all of us on the call know somebody who's lost somebody, or we lost somebody ourselves. And I don't mean to underscore or make light of the fact that this is a human tragedy above all else. It has also had an effect on the market, and it has cost the HPC market about 2 years of growth now, at least 1.5 years worth. And where we're expecting the market to get back to at the end of the market, at the end of the forecast, is not where it would have been otherwise. But HPC is a long-term stable growth market, and exascale and AI are supporting the long-term growth trends. These pure AI budgets that are completely independent to HPC are adding to the market, and we're starting to call them out separately, including for market shares for our clients. And there's enough on-prem presence that we can pull that out separately. Cloud computing is the huge effect in the market that alters the landscape and can be a major disruption to the traditional HPC business models. We are already now seeing a negative 5-year growth rate for entry-level HPC servers directly related to cloud. There is significant risk in any forecast, but first of all, we're assuming that we get through this pandemic at some point, at least from an economic standpoint. And this forecast is assuming quote unquote normal economic activity by early 2023. That doesn't have to happen, Dan. We could have a new variant. We could all go back into lockdown and hiding. We could have more supply chain disruptions. A lot could happen, and then that would knock down the growth rate from there. We could also have a significant worsening of geopolitical environment. We called out U.S.-China relationships last year, and that was before we had a war in the Ukraine. and the war in Ukraine has a potential effect with tariffs and other things that can have an effect on the market. Ultimately, we're not that sort of analyst. I'm not good at forecasting wars, but we do try to pay attention to them in terms of how the political environment affects HPC and AI spending. But those create risks in the forecast that are not pictured here. We do want to say a couple of words about the student cluster competition. Dan, we wrapped up the virtual Intersect360 Research 2022 Winter Classic Invitational Student Cluster Competition. That is now in the books.
It is. It's
Dan,
one for
this
the
is
ages.
your topic. Oh my gosh. Do you want to talk about this just for 2 minutes here?
Just a quick thing. We had 12 teams from historically Black colleges and Hispanic serving institutions. We had some great mentors providing training to them. All of the teams at the same time were trained by HPE, NASA, AWS, Oak Ridge. It was incredible. And actually something that came up in the chat, open foam. Open foam turned out to be the differentiator. And the team that conquered, Prairie View, A&M, did it by coarsening up a model in open foam and gaining a huge amount of points on the competitors. As you can see, we have on the left, the Winter Classic Studio Update show hosted by Addison and I. If you would like to, go out to our website or go to our YouTube playlist and play a couple of those. They were very cool. And because the competition was long enough, we were able to update a leaderboard every other week. And much drama there, much drama.
This was a lot of fun, and I give you tons of credit, Dan, for getting this Winter Classic Invitational started before you even worked for us at Intersect360 Research. Your work on this goes back to 2 years ago now, and more than 2 years ago, and other student cluster competitions before that. It was loads of fun wearing our sportscaster yellow blazers, and what a competition it was with Prairie View A&M coming from behind. This was like that horse Rich Strike winning the Kentucky Derby, coming back from the pack. The pack wasn't so far back, but all of a sudden the horse races through and nips out the favorite at the wire. Tennessee State had been ahead throughout the competition and then just got nicked at the very end by Prairie View A&M. And so go look at some of these videos, go look at what the students did. I highly recommend it. But there's one more piece of good news.
Yes.
Oh, sorry, you say something first.
Well, I want to say more importantly, these students right now today are interviewing with places like Lawrence Livermore, other labs, vendors, etc. And that's the great thing. That's what we're aiming for. Bring them into the industry, get them great jobs. And
that was the point.
That's the whole thing. Take the load off me, damn it.
That was the point. And the really good news, Dan, is as we were wrapping this up, we got outreach from the SC22 committee.
That's right.
And we are ready to announce at this point that there will be at least one team comprised of students from across the teams that participated in the Winter Classic Invitational. They will make up at least one and possibly two teams in the SC22 student cluster competition. We are still finalizing the details of exactly what that looks like. We're hoping it'll wind up being two teams and accommodate all the students who want to participate. So it's not going to be the traditional, it's all this school, it's all this school, but we've polled which students from across the competition are eligible because they won't have graduated yet and want to participate again, and we'll get them into the SC22 competition. I'm just so excited that some of them get to go forward.
On that point, one of the teams is actually from one school, UTEP. They have
fantastic.
Great enthusiasm there, and they had enough undergraduates because it's only undergraduates in the SC competition. The other team will be composed of a couple of other schools. What we're looking for one of the teams is a hardware sponsor, somebody that can provide some hardware for them to use during the competition, late October through the competition in November. And some of you probably on this call are going to be people we reach out to help train these students,
It's
because
I'm
we're not going there just to show up.
Yeah,
We don't play
we're
that way.
hopeful that we'll have 2 full teams there
Yeah.
from this Winter Classic
And that they will
Invitational. As
be
I said,
highly
still
competitive.
working on some of the details. This has been
Yes.
happening live as we also head into ISC. So working on the details and watch this space. But I was really proud of these students. This was a lot of fun. Thank you, Dan, for
Yes.
all the work on this.
Fantastic fun.
All right, as we wrap this up, I will remind everybody that this is far from the only thing that we have going with market sizing and forecasting. End user surveys have been a huge part of what we're doing here. Our clients have already got access to our HPC and AI technology adoption survey with data on processors and interconnects and storage and cooling and la. Our HPC budget trend survey provides a lot of the background that goes into our market sizing and forecasting going forward. We have to know what's going on from a budget perspective. We had our software survey, very detailed analysis of everything from the operating environments out through the end user applications in 11 different application domains. And coming soon, by the end of this quarter, we will get a deep dive survey on AI and machine learning out into the field, where it overlaps with HPC, where it's different from HPC, where the data comes from, what the models are. We're going to have a whole survey just dedicated to trends in AI. Follow that up with a deep dive survey on storage and data management for across the HPC and AI spectrum before we loop back around and do the technology adoption survey again. So constant rolling major surveys from us with more data going into our models and insights out to our clients.
Okay.
Working with us. A big thing, sign up for our newsletter if you're not getting them. You get good overviews of where we'll be, what our new research is, webinars like this. It's not too spammy, really. Getting on our newsletter list and finding out what's new from us. You can sign up for that on our website. Listen to our podcast, This Week in HPC. That's me. Radio Free HPC, that's Dan, among with other excellent cohorts. They're both co-hosts. They're both distributed in partnership with HPC Wire. And come find us at ISC. We're going to be there next week in Hamburg, and looking forward to being back in person at ISC after 2 years of virtual. Dan, it's going to be great to be back at ISC again. I always love that show.
First in-person cluster competition as well. They've got 5 teams. We'll be covering it. Yeah, we're bringing the Blazers.
And that's the first hour. And thank you, everybody, for attending this webinar. Let's open it up to questions, Dan. What are people asking us?
I've got some questions. Number one, should I interpret servers to mean on-prem and cloud to mean infrastructure as a service?
So servers is kind of an old nomenclature. You should think of it really as system. First of all, yes, it's on-prem.
Yeah.
And it is systems really, or usually they're clusters. We shy off using the word clusters because technically they're not all clusters. You could have an SMP that's an HPC server, and it is on-prem, and it includes things that the buyer thinks of as being a complete system.
Interconnect, memory, drives.
System interconnect is usually going to be on the server line and not on the networks line. And it winds up being on the networks line when it's something that's purchased independently. So maybe someone's upgrading their system interconnect and buying it separately. Maybe they're building their own cluster.
But let's get to the crux of the question. The crux of the question is, do they take cloud to mean infrastructure as a service?
Well, it is money spent by an HPC budget to a cloud provider. It doesn't have to be IaaS. It could be SaaS or PaaS or storage.
In our budget thing, we do pull out SaaS.
Well, on what line?
It's included in software. It's included in software.
SaaS is in 2 places. SaaS is on the cloud line and in the software line.
Okay.
It depends on how the user pays for it. If you go to your software provider and you pay your software provider elastically, and then it gets passed through them to a cloud provider, but it's on the software line of the end user in the budget, then it's in software. if it's in if you're going into the cloud marketplace and buying things there, SaaS is part of your cloud budget. So it's kind of like salsa is in two places in the supermarket. It's both in your sauces aisle and next to the chips, depending on how you think of it. So SaaS is the thing that shows up in two places in the budget, and we
Okay.
do call that out. So it's more than just IaaS. There are different models for cloud, but essentially it is cloud spending from the HPC user paid to a cloud provider.
Okay, I'm going to
Hopefully that
bounce this
answers the
through here
question.
fast. We got a lot of questions. How much do we think inflation costs will dampen on-prem?
Yeah, I was talking to somebody about that, and we're normally not inflation kinds of analysts who do that kind of financial modeling. I am concerned about it, and
Yeah.
Dan, you and I talked about it in the forecast about inflation as a damper on the forecast. Right now, I'm hopeful that it doesn't have a major effect because HPC is such a long lead item that people look at their HPC spending on 3 to 5 year cycles, and that tends to get it up above some sort of inflationary notion, but nothing is completely immune to inflation. And I
Yeah.
guess that's a long way of saying, I guess we'll see.
It's really hard to say right now. It really depends on the duration of the inflation. The
And the
longer it
rate, yeah.
goes and the rate, longer it goes, the more impact it's going to have.
Also remember that this isn't strictly an American model, right?
No.
US is maybe 45% of the total market, and that's most of the inflation that we're talking about here. But we're looking at Asia, we're looking at Europe. Inflation is a topic that it's hard for us to take into consideration every country's economy individually, but yeah, it can have an effect is the short answer.
Okay, next up, what do you see NVIDIA DGX doing in the future? I see it growing, but we haven't seen enough of it to pull it out separately.
Well, yeah, we don't typically forecast individual products that's because we don't want to affect the market in that way. If we came out and said we think product A is going to beat product B in the market, then that becomes influential rather than just measuring it. So we try not to forecast individual products or individual companies. I would rather look at the category of integrated AI systems. And, clearly DGX is in the market now and having a substantial effect. If you look at the growth, for example, in Penguin Computing year over year, they were doing a lot of DGX systems.
Oh, yeah. And there's DGX-like systems from pretty much everybody.
Right. So look at that category of things. The big thing that brings up for me that could have an effect in the 5-year forecast is whether, so right now we're looking at a lot of consolidation of HPC and AI, and we're talking about them together. To what extent do they start to diverge again, where AI is really a different thing from HPC?
Yeah.
And there are already signs that could happen with different levels of precision in calculation, different products in terms of processing elements, where you say this is an AI processor and it's not really a good HPC processor. By the mid 2020s, 2025, 2026, we really could be in a position very quickly where HPC and AI are diverging again, and people don't see them as overlapping, or they're starting not to. So that, I would say, is the big trend we're watching for.
Okay, jumping to the next question, we got a slug of them here. Do we track HPC as a service separately, on or off prem, example like HPE GreenLake? And we have started tracking that.
Yes. The short answer is yes, and contact us for numbers. But the thing is with things like GreenLake, and it's not just GreenLake is probably the most notable, but I would throw in Dell Apex and Lenovo TrueScale and Atos, Nimbix. There's a lot out there that we're Penguin on Demand. There are a lot of HPC as a services types of offerings before you even get to some of the specialists like Rescale and our systems or our HPC. They're the specialist HPC as a service providers. They're out there. For the big vendors, HPE GreenLake has done a lot more general enterprise business than it has HPC business so far. It's not none. We're watching it. Rescale and those guys have done a lot more. So it's going to be interesting to see what Atos does with Nimbix, which already had a big presence in this space in terms of keeping that market share going forward. So again, that's a long way of saying, yes, we are tracking that, and clients can contact us for more analysis there.
So what portion of the cloud is actually high throughput computing? Interesting question.
I mean, yeah, I think that's gotten to where that's almost an outdated nomenclature anymore to look at high throughput computing versus high performance computing. It's a notion that got tied to how tightly coupled a cluster is, how parallel the application is, or whether you're running lots of batch jobs versus individual large jobs. All right, so enough weasel words. Most of it is high throughput computing by the standpoint, by the definition that the person asking the question, whoever it is, probably meant it. Yeah, most of it is probably high throughput computing. An interesting thing we found in our software survey was what proportion of HPC jobs are in the 1 to 4 node level. And those are the ones that are easy to break off and throw to cloud and let my home cluster really get dominated by the more scalable computing jobs. The things that are more fungible, they're batch oriented, they're smaller number of nodes. I can run them for a while, I can stop, I can interrupt. That's easier to move to cloud. So it's not really a question of cloud capabilities, although cost does enter into it. I would say that if you compared what's HPC in the cloud versus what's HPC on-prem, the cloud is going to have a lot higher proportion of what this question is referring to as high throughput jobs.
Agree. So this is a good segue into the next question. Can you speak to what is limiting cloud spend or even causing the repatriation in a few years? And I'll go on that.
Yes, we can.
We can, yeah. The big thing about this is when you think about cloud, there's no free lunch. They have to buy chips, they've got to buy components. The big thing is they have to have enough slack space to be able to handle overflow, unanticipated spikes in workloads, new customers, and things like that. As clouds get bigger, that amount of slack space gets bigger, not proportionally necessarily, but it does become, even with the fanciest workload management in the world, it is a huge amount of hardware that will mostly be dark. And that's the microeconomic way of, at least for my reasoning, as to why cloud will not grow forever at these huge rates. At some point, it's going to take on the growth rate of the economy as a whole.
Yeah, it's cost. It's cost. It's the reason there's a maximum to how much cloud takes away from on-prem is that on-prem is cheaper. And it's going to keep being cheaper as long as you can keep the system full. And that includes full up with people, with facilities. And there are going to be organizations that are in situations where it's worthwhile to pay a premium for cloud in order to get the elasticity or to get a capability that you don't have in-house, or to burst above normal capacity. I don't want to have the people, right? There are all kinds of reasons, but on-prem is cheaper.
It is. It's 3 to 7x cheaper. And I've got a comment here from Fernanda to saying on-prem is cheaper. Tell that to the CIOs. That's the thing. A lot of
Different
CIOs have
so a
bought into
lot of
that because,
cloud is coming down from the CIOs saying thou
yeah,
shalt cloud. And that's why the proportion of on-prem infrastructure is getting more and more heavy toward HPC, because it's the portion that people are holding on to.
and running a good TCO exercise on-prem versus cloud will bring those differences up. The other thing,
Right.
by the way, the other kind of fallacies here is if you move these applications to the cloud, you get rid of a whole bunch of people. Ain't necessarily true. You still have to do you still need your application people. You're going to need storage management people. You're going to need performance management people. You still need them all, just about all of
DevOps
them.
and data ops. I mean, it's all part of the conversation here. And I'll give another metaphor here, because cloud is about having resources and ingredients and providing these things, but ultimately skills comes into the equation.
Yeah.
You could give me all of the fresh ingredients and access to a professional kitchen, and it doesn't mean I'm going to make you a 5-star meal, right? Because there's also a question of skills. Dan, which would you rather eat? A meal prepared by me in a professional kitchen with all the fresh ingredients, or a meal prepared by a professional chef in your kitchen with what you have on hand?
Pretty obvious answer there.
There's
Yeah.
the skills portion of it, right? And those skills still matter. Now, cloud oriented companies, the cloud service providers, the HPC as a service providers are layering in a lot of those skills, but it's got to be paid for somewhere.
I mean, the folks that you can get rid of, the high school kids that go along looking at a rack and they're told, if the light is off on that, pull that node out and throw it in a
I don't
wheelbarrow
want to
and
get rid
take
of
it.
high school kids. We want more high school kids in the market.
I know,
Come
but
on
those are the
now.
ones you can definitely get rid of.
All right,
Okay,
next
next
question.
question. Do you see many commercial HPC sites like manufacturing moving to cloud, or is cost too prohibitive? Even looking farther out, I would say cost is too prohibitive. And if you're talking about large scale applications, even though the cloud is supposedly infinite, for anything really big, you can't get the nodes in the same region.
Well, I mean,
Unless you
I look at
reserve
the
them.
question the other way. Do we look at many organizations moving to cloud? Yeah, right.
Yeah,
We still have a huge double-digit growth rate on cloud for the
we
next
do.
5 years. It's only after 2024 that we see this leveling out, where it reaches, and even then it's growing along with the market. We're
See,
just saying it doesn't keep going
forever.
as eating up all of the HPC market, that it gets to a level where, all right, this is the proportion of HPC it's going to be.
And I kind of read this question as meaning companies making wholesale moves to the cloud, and no, we're not seeing that.
I have heard that argument many times for 15 years now. In this space, we've been talking about cloud, and when will organizations just go all 100% to the cloud? We've done a lot of surveying on this, Dan, and we have found organizations that are 100% in the cloud.
Small.
They're coming up in our survey. They tend to be smaller organizations, and what happens is, if they grow from there or are doing more HPC, then they start repatriating some. But yes, all cloud is going to be part of the market. It just doesn't overwhelm the market.
Yeah. Moving on, any insights you can provide on how to think about accelerated GPU or other versus non-accelerated CPU only adoption and growth rates in the market?
Yeah, and we did this as part of our HPC and AI technology survey. And I don't have those slides right in front of me, but we looked at what proportion of all HPC and AI nodes currently are accelerated. And we looked at how many GPUs per node, or accelerators per node, but they're mostly all GPUs. Overall, it was what, in the 30% range now, Dan? 30 some percent of all HPC nodes in the field now are accelerated, and it's growing, which means that the proportion of new systems going in are higher than that.
Yeah, it was just right around 80%, 81% of all survey respondents said they had at least some accelerated systems.
Right. And then we look at that and in relation to what percent of the nodes are accelerated and then how many GPUs per node. The most interesting data point in all of that was that when we look at how many GPUs per node or how many accelerators per node, 1, 2, 4, 8, more than 8, that the highest bar on the chart was actually now at 4 accelerators per node. That's new, that there are more
It's
at
moved up.
4 than there are at 1 or 2. And that gets to be a really GPU heavy configuration that, yeah, it's balanced for HPC and AI, but there aren't a lot of of traditional scientific HPC applications that really leverage 4 GPU to 2 GPU ratio really well. And we're getting a substantial portion who are at 8 or more than 8
Yeah.
GPUs per node now. And those are really your DGX like heavy GPU configurations that to me are more machine learning oriented than they are HPC oriented.
And actually, as I juggle windows here, 8 accelerators per node, 44% are saying they have some.
Yeah.
9% saying it's in broad use, but it is significant.
They're out there. They're absolutely out there, and the GPUs are getting to be heavier configurations. I gave a presentation, Dan, just recently, just a very brief one in front of a panel I moderated at the SmartNICs Summit that was here locally in Santa Clara, and we were talking about the need for more intelligent networking. The topic of composability came up. And it used to be when we talked about the cost of an HPC cluster and how hard it is to say what the cost of a node is, the biggest point of variability was always memory, right? Because it's an expensive component. And if you're going heavy RAM per CPU, then it's a more expensive node than if you lightly populate the memory. That was the really variable thing. Now, that's the second biggest component of variability. The biggest component of variability is how many GPUs are on it. Right? A no GPU node is a lot cheaper than a 4 GPU node. And then you get into memory beyond that. So what's the cost of a node is widely variable depending upon what kind of node you're talking about.
Exactly. Let's wrap up on the questions here. This is a good one. Noting your inclusion of AI training and exclusion of HPC edge AI and/or AI inferencing. Do you anticipate adding either of the latter at some point in the future?
I should have mentioned that as part of the main presentation. The reason we're focusing on AI training is because that's the portion of AI that's really most affiliated with high performance infrastructure. And we're HPC guys, right? We've got a heritage in high performance computing, and the deep neural networks and tightly coupled clusters that are part of the AI training market are really something that are easy for us to track and associated with our clients. When we get into inference, most of the inference market to me is barely even something I would call a market as an analyst, because the devices that inference is embedded in are other markets, right? They're the markets for cars and smart speakers and thermostats and smart fridges, and inference is done on Open RAN cell towers and all over the place. So they drive. There are inference processors that go into those things, but they're not the same systems. So we're aware of we keep our finger on the pulse of the trends of what goes on in inference, but more to do with how the data from the edge affects overall AI training and inference and the HPC systems at the core. I doubt we're going to get into AI sizing the AI inference market. I guess the only thing we could really size there is the processing elements themselves. And there are already other analysts doing that. We're not going to do that this year, are we, Dan? Please say no.
We've got to let them have something else, Addison. We can't suck up everything.
It's not in the scope of what we're going to do. So we can talk about AI inference, and it's part of a white paper that we would write, but more about how it affects the core.
Yeah.
That's
And
why we're looking at the AI training. It's more HPC affiliated. Inference is not.
it's not. I want to put out the final call for questions. If you got them, ask them,
We got 5
because
whole minutes left.
we're coming to the last question we have on the docket. Does your hyperscale training estimate include TPU pods and AWS Trainium? Do you think these are material versus GPU systems already? I don't think
Does our
that they
what
are.
were the first couple words? Does our what include it?
Does our hyperscale training estimate?
Yes. So when we look at what proportion of all hyperscale is dedicated to AI training, we're looking at what gets spent on that infrastructure. Now it gets tricky because some of these hyperscale companies are starting to not just buy, but make their own infrastructure. And when it becomes build versus buy, we're reduced to the comment about the Chinese exascale supercomputers. Well, they didn't spend the money externally. So that becomes a different thing to track if you're making something rather than buying it. But yes, essentially they are included as part of that. And it gets funny it's one of the reasons we're not forecasting that part right now, because the build versus buy becomes a complicated part of the discussion.
Yes. Okay. And I found the last question from Fernanda. I found it, but she also retyped it. And I want to go ahead and give her the award for being the most active in chat. So good job, Fernanda.
How was she on Twitter at the same time?
I'm sure she was.
I'm gonna have a lot of Twitter to catch up on after this too. So we'll see how many of our slides got out there on the webinar between Fernanda. I don't know if HPC Guru is on or not. We'll find out. I have not been looking at the Twitter window while doing the webinar.
No,
we'll catch up on that later.
That is beyond me.
What is at HPC programmers question?
Here it is. And I believe this is in the context of cloud. What's the data cost to keep, to move, and to use? Where's the pain point? And there is a definite, or on data, there is a definite pain point. So this is not in context with cloud, Fernanda?
What's the data cost? Well, with regard to cloud, the data cost is a big part of it.
Yeah.
I think ongoing data stewardship ought to be not just a major topic, but I will say it should be the topic of the 2020s. Data sovereignty. I will expand beyond stewardship. I will say, and I said this previous to the decade starting, I think data sovereignty should be the #1 enterprise computing topic of this decade. And that has to do with the amount of data center computing that's moving to cloud. You remember the 1990s, Dan? Were you alive then? Were you part of this industry then? Do you remember people using the phrase vendor lock-in?
Yep.
That was the notion of I can't buy all IBM or I can't buy all HPE because
they'll own you.
Yeah, I can't be all tied to one vendor. I'll be locked in. And then what will I have to pay down the line? That was a big topic in the mid to late 1990s in this space. Now, consider vendor lock-in. If I'm going to cloud and I'm uploading
all of my data,
terabytes, tens of terabytes, hundreds of terabytes, petabytes by the day, by the week of enterprise data to a cloud provider, I can get into vendor lock-in of a whole new sort like you've never heard of before.
How do I move it out?
Get it. There's multi-cloud, there's hybrid cloud, there's products that the different vendors have for data movement in and out, but that data is heavier and heavier. At least we stopped using the term federated cloud in HPC for the most part. I hated it. I never believed in it. I don't see it because it's a question of where the data is and where does it live. Ongoing stewardship and sovereignty of data, I think, is the major question of how you operate your enterprise on an ongoing basis, and there should be service level agreements that are at a minimum of 25 years and probably 50 to 100 years. and you know, it's a scary question. What did data management look like at your organization 50 years ago or 100 years ago? And what do you think it's going to look like 50 or 100 years from now? And yet I can come up with data that has a 50 or 100-year life cycle
Yep.
in our market. And it's a little bit frightening.
And in this world of AI, I don't see anybody throwing away any data, unless you're the square kilometer array where you throw away almost all of it. But it's too valuable to be able to go back and regress against and throw through your neural networks and all of that.
Yeah. And look, I'm worried from the questioning that it came off like we were slamming cloud. Cloud has been an important driver of growth in high performance computing
Sure.
for the last 10 years, and especially in the last 2 over the course of the pandemic. All we're saying here is it doesn't take over all of HPC, and it would if it kept growing at 75%, but it's not doing that. It's going to keep growing at double-digit growth rates for 3 more years and then level off to market growth rates. It doesn't take over the whole market. That's what we're trying to say.
And in closing, I'd just like to reiterate my feelings as to where cloud is perfect. It's perfect for emergency use. It's perfect for overflow. It's perfect for test and development.
Great for a lot of things.
It's perfect for kicking the tires on new hardware and stuff like that.
Okay, well, that did it. We got to the end of the questions. We used our 90 minutes. I'm really grateful.
One more. Yeah, we did.
We're really great. No, we're out of time. We got to let people go.
I know.
If you have further questions, you can contact us separately. I'm Addison and he's Dan at Intersect360.com. Thank you for joining us for this webinar.
So much.
Hope to see you at ISC.
Thanks
you again.
Very
much.